So today I will be talking about how you can pass your prop challenges using this top-notch risk management. How you can pass your prop challenges with ease, yeah, total ease, using this top-notch risk management. Yeah, I'll be sharing with you how I've been using this particular risk approach to pass my prop challenge, right? With just 2, 3 trades, and how I've actually helped uh, my students some of my students to pass their prop challenge using this particular risk approach, right? And I will be sharing with you how I did it on a particular account because for the sake of this particular video I'm shooting right now, I decided to purchase to get an account, right? A Finalizing account and a 100K account, and I needed to practicalize to show you guys how this thing is done. So I made a recording of a particular trade I had to practicalize this on to show you how I did it on a live trade and how I was able to pull up my trade about 3%, over 3%. Yeah, it actually first entered 6% before it's my break even. I will be explaining how you can do it, pass your prop challenge, literally in 1 or 2 trades. But you need to listen and you need to be focused on what I'm about to share with you. What you need to understand is this: prop challenges are difficult for a lot of traders to pass, right? And a lot of traders hardly pass the first stage, talk less of the second stage, talk less of getting funded or actually getting their first withdrawal out of the market. But with this particular approach, you have a better chance and a higher chance in passing your prop challenges. Like, trust me, you have a better and higher chance in passing your prop challenges. Now, understand this, that the first thing I'm going to really talk about, which is the basis of everything, is that you have to have the winning edge with your strategy. You can practicalize this on any strategy, but the truth is that if you do not have a winning edge with your strategy, I don't know actually how you can trade or how you can practicalize this risk management. So I want to assume that, okay, you are very good with your strategy, you know what you are doing with your strategy. So if that is you, come, let me explain how this thing is done with ease. Like I said from the beginning, I will be showing you how I just did it just yesterday, Friday. How I did this on my account, an account, 100K account I just purchased, and I needed to do it to show you guys before I made this video, right? I needed a live screen record of how I did it so that you guys can get the perspective of what I'm talking about. See, one, if you can actually, what I'm trying to say is that you can actually get to pass the prop challenge on 1 trade, 2 trades, right? Depending on the movement of the market for the day, but you can get to pass it on 1 trade or 2 trades. I'll be sharing it with you on my account. I literally almost entered 7% before the market on Friday reversed, and it's my break even, which is okay. I don't mind. I know this either on Monday or on Tuesday, I should be done with the first phase and then go to the second phase, which I'm also going to record so I can show you guys how this thing is done. So let us get right into it, right? Let us get right into it. Now, the first thing you need to understand is this, right? The first thing you need to understand is this. Prop firm actually prop firms preach conservative approach to trading, right? They preach conservative approach to trading, and which actually limit a lot of traders. A lot of traders are aggressive traders, and it limits a lot of traders, right? And the fact that we have the 5% daily drop down, 10%, it can at times limit a trader psychologically on how he wants to go about his trading uh, routine with these prop challenges. But then I want to show you something, right? Something very unique, and how I enter trades and take advantage of whichever trade. Now, the first principle I try to implement why trading first prop firm is number one. Never add to losing position. Never add to losing position, right? Never add to what? Add to what? losing positions. Do not add to losing positions, right? I personally, I don't think it's wise. You are already on drop down on in losses, and you think buying at discount, right? Buying at a better price will save you, and then what you do is now start hoping that the market will back. The truth is that most times we blow our account with this. I know you've experienced this before. So do not add to losing position, but then take advantage of your what of your winning trade. So I will always advise people to take advantage of your winning trades, right? Now, what does take advantage of your winning trades mean? Now, when you enter a position and when you enter a trade and that trade starts to go your way, you have the potential of making more on that trade than whatsoever you think you enter. Did you get that right? So when you enter a trade, the best thing, instead of adding to losing positions, add to your winning trades. Don't add to losing positions. Just do the reverse, because what all everybody else in the market is doing is to add to losing position. Now, rather than add to losing position, why not add to winning position? But then you have to do it strategically. Now, this is the risks I will be teaching you about in a moment. So let us get right into it. Now, let us check how this thing is done. I will first show you how I do it on my my screen, on my board, and then I will take you to chart and explain how you can do this for yourself as well. So let me show you. Let's assume we have a market ranging from Asia range, and all of a sudden it started moving. Probably it gives us a double top after a touch of liquidity. I'm trying to use all these times. Trust me, I don't know liquidity like that, right? I don't know liquidity. I'm not preaching any strategy whatsoever you have, you can use, but then look at how this thing is done, right? I want you to look at how this thing is done. Now you agree with me that market don't just move in one direction, right? Market moves, all right, retrace moves, retrace moves, retrace moves, retrace move, retrace move, retrace before, right, it stop moving. Now how, hey, come on, so how do I do this, right? How do I do this? How do I go about this? That's the question you should be asking. And how do can you go about this for yourself? Let's assume I pick my position here, and probably okay. Let me assume I'm trading an 100K account, and I enter my position here. Let's assume I entered 5.0 here, and of course, fortunately for me, market start to pull my way. All right. Now market didn't pull against me. Now market start to pull my way. All right. All I need to do is for market to form a new high and form a retracement. Now, or let me put it this way, all I need to do is for market to form a retracement before it continues its movement. So, like we've agreed that market don't just start pulling up, market don't just move in direction, in most one direction, in most cases, market pull up, then come down a little bit, then pull up, then come down a little bit. So I'm using a 15 minutes practical example to explain this. Now, when markets pull up, and retraces with, let's assume, a red candle, right? What you do next is to wait, because this is our initial high, is to wait for market to close above this high to form a new high. Now, if market closes above the initial high, what I do is to enter another new position. Let's say 5.0. Now, let's quickly come back to our initial position. Let's assume this initial position we've entered in time past, we entered with 10 minus 10 pips stop loss, right? We entered with 10 pips stop loss. And now market has moved up to this particular position where we have a close above the initial high, right? Now, what I do now is to bring this my stop loss and move it up, right? In fact, most cases I move it up after a very good movement in the market, right? I move it up a little bit above my entry, right? So that it can accommodate the new position I just opened or I'm about opening, in whichever case it is. Now, what I do right there is to shift my stop loss, lock in profit, and make this stop loss this new, and set this guy also, because of course when market retraces, it eats this place, it is going to eat this guy's also stop loss. I don't know if you get that. I mean, the break even or uh, uh, closing above my entry point, like putting my stop loss above my entry point right here, right? Or locking profit. Some people call it locking profit, right? Will also be my stop loss for this one. Think about it. If this be my stop loss, right, for this one, right, at this particular point, I lock in profit right here, and the distance between this one is just the profit I've made from here. Now, imagine if market starts to pull your way. It is still the same amount you are risking. I don't know if you get what I'm trying to say. You are still risking the same amount, right? Now imagine if market starts to pull your way. Now market continues your way. Now this time around, you are already in profit because you have two positions running, right? Now imagine market now retrace again and give you another new high. What are you going to do? I'm going to enter another position 5.0. But this time around, all these break evens I have here with the stop loss of this guy, I'm going to move it above this guy here, right? And wait for this market to what do whatever it wants to do. Let's say assume it's moved up again. I'll keep pushing and keep maintaining my risks, keep pushing and keep maintaining my risks. And if at all market is going to reverse against you, market is going to hit you at break even. And at that break even, you've already locked in many profits. Now, let me explain how I did my at the the highest high at that time, I was already on 6,900 profit, right? And of course, I have 8,000 to go, and that means I have about one 1,100 or thereabout left to break the challenge. But this was what happened. Uh, market after dropping all my entries, which I'm going to show you. Don't worry, I'll show you the trade. I will explain how I did it, and then I will show you exactly how I did it also. So which I brought all my entries like to break even, my stop losses. I brought them to break even and lifted them above the second to the last entry. Now the last entry I entered, market was already going my way. A lot of a sudden, market reversed on Friday and hit the break even and also hit this guy's stop loss. So from instead of taking just little whatever we take in the market, why not take advantage of your winning position? And instead of market giving me any drop, there was no negative. But I ended up closing the trade in about $3,300, which is absolutely cool for a single trade. What if market has moved my way and market just kept moving? Uh, I would have actually I will rather pass the phase one of the prop challenge in a day. Now, let me show you how I did this on charts and so that you can understand better because it's important I show you how this thing is done on charts. So, that particular trade I picked was USD card, right? I picked the USD card, and the first place I entered this USD card was exactly here, right? I entered here, and I set my surplus 10 pips below, and unfortunately, market came back and hit my stop loss, right? And after market hit my stop loss, I saw my entry again after this pattern, right? I'm not trying to explain my strategy to you, right? Whichever strategy you use, you can use you can use, but let me try and explain how I do this for myself. Now I entered again here, right? I entered the game here. This time around, I entered with 10 standard lot. Right, it's on 100K account, and this market is not a volatile market. So after I entered with 10 standard lots, market fortunately started pulling away. I entered with standard lot 5 pips this time around stop loss. Right, my stop loss was around 5 pips or thereabouts. Market started pulling my way. Now I want you to see something. I want you to see something very clearly. This was our initial high in the market. Right, this was our initial high in the market. Now, market I entered here, market pulled up and closed above this initial high. Right, what am I supposed to do? I'm supposed to pull another entry into the market. So that was exactly what I did. So after I entered 10.0 here, right, our market moved up. I entered a new position, and I call this position, I think here, the position I entered was half of what the initial position, which was 5.0. And immediately I brought my stop loss, 5p stop loss to break even. Now, when I brought my stop loss to break even, that automatically means that whatever I am losing will not be on this 10 pips, 10 standard lot position, it will be on this 5 standard lot position. Because if this 5 standard lot position comes back, it is going to be hitting this break even right here, because that's where I will place its own stop loss. But fortunately for me, market pulled up and continued the movement, which actually put me in a lot of profit, right? It put me in good profit. And yeah, this was what happened again. Market formed another new high here, right? When I saw market from this new high, I and market has moved this far, I then move this break even for 10 standard lot and the 5 standard lot, the second entry, I then move the break even up here, right, to cover up this position and also this position, because I just discovered market has formed a new high. How do I know? It's because of this retracement candle. So market dropped a little, which I was okay with. At least if it's going to hit my stop loss, it will be my break even, and I'm still going to close in good profit. Now imagine. Now after this, market fortunately moved my way, right? Market moved up again to form a new high right here. What I did again was to enter another 5.0 right there, because this was our new high, and all I did was all I did was to move both this stop loss, the break even that we all have here for the first and second position, to around here. Well, I moved it to around here, if I'm not mistaken. And of course, I just entered 5.0. If and this guy stop loss, you just have to maintain it around your break even. So that in just in case this market reverses, you are still going to end up in what? In big profit, like massive profit. Now, what happened next? Well, yeah, market formed a new high again. How do I know? Is because of this retracement. Is when I have retracement, I know okay, market has formed a new high, and all of a sudden, market pulled up. At this particular point, the market pulled up. What did I do? I brought all my break evens that were here, and I brought it up around here, because I just entered a new position. Why? Because market has formed a new high with this candle. But at this particular point, at this particular point here, I was already up by 6.9, and all of a sudden, market just reversed. Yeah, market just reversed against me, and it's my break even at this particular point, and I went back because of course I entered the position here and it went back in loss, right? I ended up with $3,300. Now imagine that this market gave me one more candle up, man. That would have been the way I would have broken the first phase of this account I just got, right? Of the account I just got. Now, this is how I've been doing it, right? This is how I think you should do it. Why? Because it is a conservative approach which actually suits prop firms, but you are trading in a way that you take only advantage of your winning trade. Now imagine if you do this, you enter a trade. You know, many at times you enter a trade and it will be as if you leave early. I don't set stop loss. I don't set TPs, and all I do is to enter positions accordingly and just move my stop loss up until markets come back and move hit my stop loss. Yeah, so you can break this thing. Now I'm up by 3,300. If I try it one more time, there's high probability I break it. Max, I think it should be about 3 times of good profit, of win, of getting a very good trade, right? To break this kind of stuff. So this is exactly what I'm talking about. This is things you can weaponize, right? These things are not common in the market. This is an approach you can weaponize and use it to pass your prop challenge, right? Your prop challenges. Because I've come to understand that when you have winning trades, right, you just need to take full advantage of it. Now, let me show you, okay, because I need to clarify a lot of things, right? So let me now show you the account I got, right? Uh, funded next account I got, which is this. Look at it right here. I'm not going to open because of my login details. Can you see? Thanks for purchasing our Stellar account. Right, that's the account I got, and I only logged in, and of course, I started with it. Right, and that's just how it goes. Like this is how we pass for flames. Like we can't I can't sit down and start trading 10, 20 trades before I pass one. I just try to take advantage of my winning trades. And when I have losses, I try to call them off very fast. Right now, this is exactly what I do. And I think you should implement this thing too, because it's actually going to help you pass your prop challenge with absolute ease. Now, check what I'm talking about. So I entered position. This is exactly how I do mine. How I entered position. Look at it going like just as I've explained to you. I entered my first position, my second position, and how I kept moving my stop uh, loss up to break even. I did it accordingly without rushing myself. Right. I have it in the back of my mind. If at all I'm going to lose money, to be just the amount I can afford to lose. That would be my what my initial capital. So look at it gradually. I get adding position, and then I get moving all my stops up, right, to break even, and gradually I get adding new position, and then get moving my stop up to what to keep my uh, my trade running. Just look at how I do it, right? Uh, so this thing is something you can easily do, right? Just take advantage of your winning position. You never can tell which position you enter. I just keep going, just keep going. Take advantage of it. And when the market is against you, cut your loss, right? Very fast. Because before this trade, I first hit a stop loss of about 10 pips, which made me lose about $600. But of course, I had to enter again because I knew my confirmations. And then when I entered, it started going my way, and all I did was just take advantage of that. Can you see? And that was how I closed all the trades after I did, and I closed all the trades right. And all